What is up, guys? So today I'm going to be making a SMT divergence videos for you guys, pretty much explaining in depth how I use it, how you can use it on complementing pairs such as NAS and SPX as I use it, or you can use it on other pairs such as EU or GU. They also work, but I've tested it on NAS 100. I've tested on SPX, those working together. And I'm going to show you and pretty much explain to you on the charts how I use it, how it works, and yeah, so let's get in the video, let's get on the charts, and I'll show you how to do it. So as you can see, this is the SPX 500 on the 5-minute time frame. I'm showing you it on the 5-minute because it's easier to see. You can see it on the 1 minute, but the candlesticks are so small, it'd be just too much on the screen for you guys to be able to actually understand it. So I'm keeping it simple, going on the 5-minute. And then I'll go down to the 1 minute and show you the entry of the trade I took today on NAS 100. So I do mainly trade SPX 500, but I have recently started using NAS 100 and the SPX 500, together in tandem to take a trade. No matter if my bias is bullish or bearish, it doesn't matter. I usually just stick with my daily bias though. I don't really like to go against my daily bias because for the most part, it does work out that the daily bias ends up working. It may not be the overall trend, but it does end up working. And pretty much if you figure out what your daily bias is, it's a good trading habit to get into where you stick to what you know, what you think. Doesn't work out, it doesn't work out. Move on to the next trade. So pretty much, let's get into the trade right here. So as you can see, there is this red vertical line right here. I will try and make it a little bit more vibrant for you guys, as you can see. This is the 9:30 New York Stock Exchange open. Okay, so after this point, we are looking for trades. On the 1 hour is what I use to look for my daily bias. I don't have bar replay, so I can't go back and show you what I was thinking, what I saw as the market opened, but it is what it is. I don't have enough money. You know, I'm broke. It's a broke boy thing, you know what I'm saying? So pretty much at this point, you can see bullish market structure. It's pretty much bullish. Okay. I had a bullish bias. Okay. So now I go into the 5-minute. You know, you mark out your highs, your lows. I won't do that right now because you should already know that. If you don't, maybe I'll make a video in the future explaining how to do that. It's pretty easy. Pretty much use highs, lows on the 5-15 minutes as TPs, or yeah, just prices that I would like it to see get hit, big profits. All right. So as you can see, this is again the 9:30 a.m. New York Stock Exchange open. Okay, so let me just get rid of this, just so it's a little bit easier for me to see as well. So I'm going to grab my line tool. Okay, as you can see, this is London session 3 a.m. I live in the New York area, you know. I live in Canada, but yeah, I'm in the New York time zone. So this is 3 a.m. open. This is the London low. Anyways, doesn't really matter. This is just the most recent low, pretty much before the New York open. Okay. As you can see here, I spotted, and they're pretty easy to pick up on once you start seeing them, once you understand what SMT divergences are. They become pretty easy to spot. And yeah, you'll be able to see it once you understand it, or to the point where I understand it. You know what I mean? So as you can see here, I have a low right there, and I have another low right there before that move up. So on the SPX, I saw a higher high. As you can, it's very slight. It's easier to see on the lower time frames, but right here, you can see a slight move up. So let me just mark it right there as a SMT. Now, if I go to NAS, you see that very same low. I'll show you 3:40 a.m. You have a low, and on the SPX, 3:40, exact same time, we have that same low I marked out. I have a low right there, and I actually have a lower low. As you can see, it sweeps liquidity. Let me just get rid of this. I have this horizontal ray tool. This was a point of interest I was looking for on the SPX. As you can see, there is relative equal highs right here. So let me just get rid of that. So this was a point of interest I was looking for. This is where I spotted the SMT divergence. There's a ton of SMT divergences everywhere, but if they're not at a point of interest, I'm not looking for them and I don't spot them and I don't use them. That is the point. So on the SPX 500, that was a point of interest I was looking at to get swept to then take my buy entry because that was my daily bias this morning. So pretty much I marked out before this sweep. As you can see, I don't have bar replay. That was my point of interest on as 100. So I marked them both out. I am waiting. There was some news pretty much sometime into market open. SPX, I was looking at first because I mainly trade SPX. Okay. I did not see that sweep of liquidity. I saw that sweep of liquidity, but on the smaller time frame, as you can see, it blew right by it. There is no sweep of liquidity. It was just a pure clean break. So I just dismissed that low as a sweep. Obviously, I saw no sweep there, but as you can see on the NAS, you actually do get a sweep of liquidity. Okay. Let me just zoom in for you guys right there. Just imagine these are not all there because I, again, don't have bar replay. So I saw that sweep of liquidity. That was a point of interest I was looking for. Okay, so I'm like, boom, I see that sweep of liquidity. It sweeps on the SMX or SPX, sorry, it did not sweep. Boom, SMT divergence. I go to NAS, I'm looking for that trade. I go down to the 1 minute because I trade on the 1 minute. It is the best for getting quick, easy entries. So that, as you can see, there are the double bottom right there, or the relative equal highs. And I see this beautiful, beautiful sweep of liquidity right here. Comes down, sweeps liquidity, breaks up with an engulfing bullish candle. Mine are purple, as you can see. I see that very big bullish engulfing candle. We're making another high. We make a high, low, because this is a bearish black candle, and I see this BOS, or break of structure. Let me just draw it out right here. We have a high, a low, and a BOS on the 1 minute. Just get this off right there. Very small to see. I will zoom in for you guys. It's on a 1 minute time frame, so it goes pretty quick. I see that break of structure. That is where I enter. Now, keep in mind, I do work during the morning, so it is hard for me to be on my phone. So I don't always get the best entries, but that is where I would have entered. I got filled right up here, but this is the BOS. I enter on the close, have stops right below the most recent swing low. That is also usually where I put my stop losses. You could put your stop loss right there, but again, you could get stopped out very quickly. I like to have the most recent low. As you can see, it is the sweep of liquidity as well. So pretty much if I enter there and price goes up, comes down, and just hits my stop loss, I know it's going for more liquidity. I lose the trade, I reevaluate, I move on, wait for the next day, whatever you like to do. I like to keep looking, kind of see what happens, but pretty much see that BOS, break of structure, right there. And so on the 5 and 15 minutes, I mark out my liquidity that has some relative equal highs right there, as you can see. So yeah, that was one TP right there. I think my next TP was these next relative equal highs, and then my final was up here at these top relative equal highs. As you can see, that's pretty funny. I have a lot of equal highs in the London session. So yeah, I had my entry right there. TP, final TP was all the way up there, as you can see. So pretty much I see that BOS. I'm waiting for my first TP to get hit. And what I like to do, I have the free plan. If you have a better plan, a little bit easier, I pretty much have that horizontal ray. I set alerts, just a crossing alert, super easy. You don't have to be on your phone staring at the charts. Super helpful. For me personally, it helps me not think about the trade. It helps me focus on whatever else I'm doing. I get the notification. I go into MT5 immediately, take 50%. And that is really good for my psychology. And I like that feature a lot. Maybe when I do upgrade to a higher version on TradingView, you're able to have more than one alert. So I would set alert for all three TPs. TP1 gets hit, boom, I go on my phone, MT5, 50%. Wait for the next TP to get hit, 50%. Yeah, so pretty much I see this break, again, enter, it goes up, hits TP1, beautiful, just smashes TP1. Took 50% right there. It juggles around a little bit, comes up. I'm not looking at my phone, so there's no emotion. It's like, oh, it's going up, and these huge moves down. I'm not taking more profits. I'm sticking to my plan, which is very crucial when you're a beginner trader like me. It's very good to stick to that trading plan. Helps with psychology, not right now and also in the future. So yeah, I pretty much hit TP1. It comes back down, stops me out. I look at my phone, stopped out, still made profit. So it was whatever. I was like, okay, boom, took profit. It hit stop loss. I closed my phone for the rest of the day and went about my day working, but I still made money. So yeah, SMT is a huge part of my trading plan right now. Currently, it's been working very well for me. So I like to use it, and it usually works out. So the next point I do want to get into is what an SMT divergence is. It is pretty much where one pair, again, just going into more depth, trying to go into more depth and explain it. One pair makes one move, like a higher high, but the other pair makes a different move, a lower low, and vice versa kind of thing. And as I've learned recently, and it's pretty obvious, retail traders like myself, we do not move the markets. It is the market makers who move the markets, the smart money, SMC, what everyone's been trading. That is what moves the markets. So the best way to explain my next part is sweep of liquidity. If you don't know what a sweep of liquidity is, so many people have talked about it. It's pretty much you have liquidity resting above highs like this, big wicks, or below big wicks like right here and right here. And that sweep of liquidity is market makers driving price to that point, taking out whatever it is, buyers or sellers, depending on what the sweep is, and then eventually going in the direction that you wanted it to. So yeah, it takes the sweep, giving it the liquidity, giving the market movers the money they need to make those big moves. So as you saw from earlier, Nas swept liquidity. That's what gave it and drove it up, like this big price action. It's what drove this price action up. But if you see on the SPX, if we go and see the SPX, see what happened. We did not get that sweep of liquidity, and we did not get that big of move because there's not a lot of liquidity. The market makers on SPX didn't have enough liquidity to drive the price up as big as on the Nas did. See, where is it? Right here. It swept, and we had huge impulsive moves up, which is beautiful for us. It's what we want to see. It gets us in and out of trades very quickly like this. That's what we want as traders. We don't want to be in the market, have extra risk on the table. We like to be in and out. That's why we use the 1 minute time frame. So yeah, on SPX, if you're looking for buys and you entered there not knowing, these buyers didn't get a huge move. So you didn't get, maybe had TP1 there, maybe, but on a 5 minute, that's probably not a significant high. So you probably didn't have a high there. You probably had your TP right here, right here, or right here. So maybe you hit TP1, maybe you got lucky, but it would have been not a very good risk to reward, because the break of structure on the SPX, as I'm looking at it right now, if someone entered right here, you would have a break of structure right, like pretty much no clean break of structure. Maybe there's one in there for you, but for me, there's no clean break of structure, which means no entry. So pretty much no entry, no trade, no lost money. And at the end of the day, that is what we want. We don't want to put money on the table and risk it if there is not a clean setup that we like to see, that we know how to trade, etc. But on the NAS, we did see that. took the trade, we made the money, we got out the trade, whatever, 10, 15, 20 minutes later, and we were done for the day. No more risk, no more thought, no more worry, no more emotions, no nothing. And as a new trader, that is what I like. That is what is good and what works for me. So pretty much, if you were looking for a sell today, you banked, banked on SPX. But see, on NAS, did get that sweep of liquidity, but as you can see, it sweeps liquidity, but there's no major highs. So if there's no major highs, looking for a sell, and it doesn't sweep those major highs, you don't get as big a move. Yes, it sold off, but look how slow it is. It comes up, down, it's down, up, down. Not fast. This is not fast moving. This would take, say you sold here and your first TP was here. Say you sold, see if there was a break of structure right here. Say SPX, this is NAS actually, when I traded. If I was looking for a sell, it did not sweep. Yep. A major high. We had a break structure right here. So say you entered here in your first TP, I probably would have had my first TP right here. That took, let's see, where's my measure tool? I entered right here. First TP was right here. That would have took 53 minutes to hit my first TP. That is so much time on the charts that you're looking at your phone, emotions in your head, thinking, oh, is my trade going in my direction? Is it not? You're not on your phone. You're checking every 5 minutes, if not every 2 minutes, because your emotions are everywhere. You don't know if your trade's going your way, whatever the deal is. Now, if you go into the SPX, people entered on a pretty major high. As you can see, I probably would have marked out this high. Let me just zoom in for you. If I was trying to look for shorts on the SPX, I probably would have marked out this high or this high or any of these highs right here, that one pretty much. We got that sweep of liquidity, that beautiful sweep, that huge push up, huge push down. That's a big indicator that it is a sweep of liquidity. So now you guys see that sweep, you wait for this break of structure. There's no clean really break of structures in there. You do get that break of structure there. I probably wouldn't have entered on that because it is a very bad risk to reward. There was a break of structure right on this candle, so you could have entered there. Now, if you're taking a sell and you say you sell right here, your first TP gets hit in 5 minutes. 5 minutes, okay? Take that in. 5 minutes and your first TP gets hit. Okay, then you, if you're scrolling on the 5 minute, maybe you have a TP somewhere in here. Maybe there's a fair value gap, order block, whatever it is. You guys, maybe there's a equilibrium that you draw out, whatever. Let's just see it, just to make it easier, just to explain it, and just so you guys understand. You're looking to the left, price is up there. You got a low here. You got a low technically right there. Probably wouldn't have marked that out. That'd be a low right there. You have a low right down here. Let's say for whatever, these are your take profits for the short, okay? So as you can see, I think I moved that. There you go. As you can see, you enter up here. Even if you enter up here, say you enter up here, your second, third, fourth, fifth TP get hit in 52 minutes. The same amount of time that your one TP on NAS, where it didn't sweep a major high, if you're going for shorts, on SPX, where it did sweep a major high, grabbing liquidity, giving the market makers liquidity, money, pretty much, to move, hits 5 TPs compared to NAS's 1 TP in the same amount of time. If you have a trade on, it hits 53 minutes, you've hit all 5 TPs, you're done for the day. If you're on NAS selling, you hit 1 TP, and maybe you're still in a trade because you're greedy and you're looking for more trades. If I hit 5 TPs in one day, I'm out of the markets till the very next day. I don't give I don't give a fuck, pretty much. If there's another trade set up, I don't care. It's too much risk for me, so I'm out. So pretty much that is why SMT divergences are so important to me. is why they're so big in my trading plan nowadays, and why you guys as well should start trying to learn SMT. If I didn't explain it right, you guys still don't understand, I would try and look up other guys or other girls' videos of SMT divergences, and really try to learn it, because personally for me, I found they are super helpful, super useful, and can overall just help you find those trades no matter buy or sell, whatever you're looking for. As you can see, yeah, they're a very beautiful tool to it's a very beautiful tool to use, and I've had very good luck with it. And so yeah, that is today's video. That is how I use SMT divergences. It is how I use them with my daily bias to win, no matter it's buy or sell. Again, you don't win every single day. You can't, you don't have, no one has a perfect win percentage, but they do help. If your bias for whatever reason is different from the next guy's, it doesn't matter. You can still end up winning trades. So yeah, that is my video. If you guys have any questions, please leave a comment. I reply and like every single comment, no matter what it is, and no matter pretty much what time of the day it is, I will reply and help you guys out if you have any questions. So yeah, that's the video. Thank you guys for so much for stopping by. Make sure to check out my TikTok. I post pretty much daily, if not every other day, videos of my trades, explanations, that kind of stuff. So yeah, appreciate you guys, and take it easy, and I'll see you guys next time. Peace.